You're watching BloombergQuint. We're getting you a quick summary of the monetary policy review with an analysis pending until all the documents are uploaded. But the headline news, of course, is that there has been no change in the benchmark repo rate. That was as expected. All economists polled by Bloomberg had said that the repo rate will be retained at 4%, and it has been. There has been no change in the reverse repo rate as well, which is monitored and controlled by the RBI. That remains at 3.35% as well. Equally important, there does not seem to be any change in the guidance. Remember, in the October policy, the MPC had given you a rare time-bound guidance, and there were questions about whether they will continue with that, given that inflation has surprised to the upside. But Governor Das speaking did say that the MPC is reiterating that it will remain accommodative as long as necessary, at least during the current and into the next financial year, to revive growth on a durable basis. The change, though, comes in the acknowledgement that inflation has not eased as much as the committee would have liked it to. So Governor Das said that the MPC was of the view that inflation is likely to remain elevated. This constrains the MPC from using the space available at the current juncture to support growth, Das said, adding that the MPC will monitor all threats to inflation. Remember, inflation has remained above target for 7 months now. Their target is 4%. Inflation is running at 7%. There is also a slightly academic question of whether the MPC would need to explain itself to the government in a letter, as has been mandated by the monetary policy agreement. But we don't know yet how that will play out. They may have to, though. On the growth and inflation forecast, they took note of the better than expected high frequency indicators. GDP is now expected to contract by 7.5% in FY21. Q3 and Q4 will see a small positive growth, 0.1% for Q3 and 0.7% for Q4 is what is being predicted. On inflation, and these are the important numbers to watch, they said that CPI inflation is expected at 6.3% in Q3 and at 6.8% in Q3 and 5.8% in Q4. So that's what we are saying. Inflation will remain well above target for consecutive quarters now. Now, the important part to focus on was also liquidity. The markets were waiting to see whether there's any guidance that liquidity is going to be rolled back. There wasn't any explicit guidance, although the governor did say that they will use all the tools at their disposal, given the large capital flows that are coming into the economy. But then he was quick to add that financial market conditions will remain easy and that the RBI would ensure adequate liquidity. We will parse the fine print of that over the next few hours or so. But on the face of it, there was no obvious indication that liquidity is likely to be rolled back. Some of the other highlights from the policy decision: long-term repo operations will continue. They'll be expanded to cover a wider set of stress sectors. Commercial banks and cooperative banks will not be allowed to pay dividends for FY20. That had been announced earlier, now extended for the full year. Regional rural banks are being allowed to access the liquidity adjustment facility and the marginal standing facility along with the call money markets to integrate them perhaps into the financial system a little bit more. Draft directions are going to be issued, a whole host of things. Credit default swaps, you'll see how this round of those directions play out. On derivatives will be issued today. On bond market instruments will be issued today. And he also said that there will be a discussion paper on supervision of NBFCs based on size. This is something that has been anticipated, is likely to come by January. And a quick note on the payment side, contactless payments will now be raised. The limit will be raised to 5,000 instead of 2,000. That's a summary of some of what we caught in Governor Das's speech. We will be back on BloombergQuint post 1 p.m. with an analysis from a market viewpoint, and later in the evening from an economy standpoint as well. And do go to BloombergQuint.com to read all the highlights.